Contemporary business environment. Topic emphasizes that the contemporary business environment is characterized by rapid change, global interconnectedness, and heightened expectations of corporate responsibility. Organizations face pressure not only to deliver financial performance but also to demonstrate strong governance, environmental stewardship, and social impact. The topic explains that transparency expectations continue to rise, driven partly by increased public scrutiny and partly by the evolution of sustainability reporting frameworks. Entities must now consider climate risks, technological disruption, geopolitical uncertainty, and shifting consumer behavior when preparing financial and narrative reports. These challenges also affect judgments in financial reporting, such as impairments, going concern assessments, and provisions. The contemporary environment requires reporting to be forward-looking, integrated, and responsive to emerging risks. Stakeholders want clarity about how businesses will manage uncertainty, adapt their strategies, and continue to create long-term value. Topic highlights that these demands are shaping the next generation of financial reporting standards and regulatory frameworks. A key theme in the topic is the shift toward purpose-driven business, where companies are judged not only on profitability but also on how they contribute to society and manage broader impacts. This shift is visible in the rise of integrated reporting, sustainability metrics, and enhanced non-financial disclosures. As organizations adapt to digital transformation, new business models such as platform-based services and intangible asset-driven value propositions create challenges for recognition and measurement under existing IFRS rules. Users increasingly expect financial reports to address long-term risks such as cybersecurity, supply chain resilience, data governance, and environmental transition. This reflects the broader move toward reporting that captures value beyond the balance sheet, including intellectual capital, human capital, and innovation capacity. The contemporary environment therefore demands a more holistic communication approach, where financial and non-financial information is interconnected and strategically aligned with business objectives. Topic stresses that entities must evolve their reporting practices to meet these expectations if they are to maintain trust and credibility with stakeholders. The topic also highlights that global regulatory change is a defining feature of the contemporary environment. Governments and standard setters increasingly collaborate to refine reporting standards, enhance comparability, and improve consistency across jurisdictions. A key trend is the alignment of sustainability reporting with financial reporting, including initiatives to harmonize global ESG standards. Entities must therefore prepare for more rigorous reporting obligations, including greater scrutiny of green claims, environmental assumptions, and risk disclosures. At the same time, economic volatility, from inflation to supply chain disruption, creates pressure for entities to update and enhance risk reporting. Users expect management commentary and integrated reporting to provide genuine insight rather than generic statements. The topic makes clear that navigating the contemporary environment requires strong governance, robust internal controls, and a commitment to high-quality, decision-useful information. Financial reporting must evolve with business reality, ensuring that annual reports remain relevant tools for accountability and strategic communication in an increasingly complex world. Changes and developments in financial reporting. SBR UK covers the UK-specific elements that supplement the international program, ensuring that candidates sitting the UK paper understand how domestic reporting requirements interact with IFRS standards. While the exam remains largely aligned with the international version, UK-specific content is incorporated predominantly within Section B, typically representing 15 to 20 marks of the examination. The purpose of including SBR UK within the syllabus is to recognize that UK entities operate within a legal and regulatory framework shaped by FRS 100 to 105, as well as the Companies Act. These frameworks impose obligations relating to the format of financial statements, the permissible accounting options available to different classes of companies, and specific disclosure exemptions applicable to qualifying subsidiaries. The material highlights that listed groups in the UK must apply IFRS, though their individual financial statements may adopt reduced disclosures under FRS 101. By contrast, unlisted companies generally apply FRS 102 unless they voluntarily choose IFRS or qualify as microentities eligible for FRS 105. Understanding these distinctions is essential because they influence recognition, measurement, presentation, and disclosure requirements across UK reporting environments and ensure that financial statements comply both with overarching IFRS principles and jurisdiction-specific statutory requirements. A key feature of SBR UK is the emphasis on demonstrating how UK-specific requirements affect the practical application of international standards in examination scenarios. The material signals that candidates must be able to distinguish when IFRS standards take precedence and when UK GAAP rules are required, particularly for smaller entities or group companies preparing individual accounts. The need for clarity is reinforced by the explicit reference to FRS 101 disclosure exemptions, which enable qualifying subsidiaries to omit a range of IFRS disclosures provided certain conditions are met. This creates a practical divergence between the consolidated financial statements of listed groups, which must fully comply with IFRS, and the individual statements of their subsidiaries, which may report under a lighter disclosure regime. Consequently, SBR UK demands an ability to evaluate transactions by reference to the correct framework and to justify the implications of applying UK GAAP rather than IFRS, including differences in measurement, recognition, and transitional requirements. By mastering these UK-specific elements, candidates enhance their ability to respond to UK-focused scenario-based questions and to articulate the implications of domestic reporting rules on transparency, comparability, and the decision usefulness of financial statements. UK GAAP, as outlined in the material, is governed primarily by FRS 100, which establishes the accounting framework applicable to UK companies. The rules determine which set of standards an entity must follow based on size, listing status, and eligibility for simplified regimes. Listed groups must prepare consolidated financial statements under IFRS, whereas other companies typically follow FRS 102 unless they choose to apply IFRS voluntarily. Microentities may instead adopt FRS 105, which significantly reduces disclosure requirements and simplifies recognition and measurement rules. The content emphasizes how UK GAAP aims to provide an accessible, proportionate reporting regime while maintaining consistency with key IFRS concepts. However, UK GAAP also includes fundamental differences from IFRS in critical areas such as revenue recognition, financial instruments, deferred tax, and goodwill amortization. Understanding UK GAAP is therefore essential for analyzing how financial performance may differ across reporting frameworks and for identifying the implications of these differences on comparability and stakeholder interpretation. Mastery of these nuances enables accurate evaluation in exam scenarios where UK-specific standards must be applied to unfamiliar transactions. The structure of UK GAAP is designed to cater to a diverse range of entities while ensuring cost-effective compliance. FRS 102, the core standard for most UK entities, adopts simplified versions of IFRS-based principles, making it more accessible for small and medium-sized businesses. The material highlights that companies operating under FRS 102 must also comply with the Companies Act 2006, which imposes prescribed formats for financial statements, in contrast to IS1 under IFRS, which provides recommended rather than mandated formats. This statutory alignment reinforces the idea that UK GAAP is both a legal and accounting framework. Additionally, specific exemptions exist within UK GAAP, such as reduced related party disclosures within wholly owned groups, that do not exist under IFRS. Such exemptions reflect attempts to balance transparency with proportionality. The syllabus expects students to evaluate these features critically, considering how differing levels of disclosure may influence users' ability to assess stewardship and future cash flows. Ultimately, UK GAAP requires an appreciation of how UK legislation and standard setting interact to produce a coherent reporting structure that remains broadly aligned with IFRS while still addressing the needs and constraints of domestic entities.